Good morning on this Monday morning. Jayaram from Almus. Friday was a very volatile day for most of the markets. Stocks got sold off initially and made small recovery later. Overall, global stock markets fell, with European stocks losing more than 1%. A lot of it has to be blamed on the big rise in yields across, particularly the US 10-year and 2-year. They hit 2-year highs. So this is indicative of sell-off in the bond market, as well as expectation that the financial conditions are tightening. There were other reasons, of course. Three major banks, JP Morgan, Goldman, and Citi, announced poorer than expected results. JP Morgan, in fact, gave a slightly poor outlook also. Apart from that, we had retail sales and industrial production data that came lower than expected. And the Michigan consumer sentiment took a big hit of 2.5 points, which is very low the last 1 year. This is most of it is blamed on high inflation, like higher prices affecting retail sales, apart from shelves being empty due to supply chain issues. Industrial production also affected because of supply chain issues, and consumer obviously not feeling good due to rising prices. So all this means, that Fed has to take strong action to contain the price rises, and so none of this will stop Fed from going ahead with its plan for hiking rates, cutting down balance sheet, etc. Market is still coming to terms with how much the Fed will actually hike. As of now, it looks like up to 1.5% Fed funds rate in the next 2 years is probably priced in, but it could be much more, and that is what the market will try to price in the coming days. Emerging markets have so far been quite sanguine about all this. They have been calm, but it's only a matter of time before we see the turbulence, when we actually see some fund outflows happening as the financial conditions tighten. Also, it does not ignore the geopolitical threat of Russian attack on Ukraine, and US also preparing for such an eventuality. Oil prices hit a new high, and on IAEA report that Omicron virus is unlikely to affect the demand, and the output levels of OPEC being much lower than what it was earlier, still the demand supply situation is not in favor of the buyers. So we have oil prices also trading at multi-year highs now. We had Chinese data today where GDP and industrial production came higher than expected. Retail sales was a big miss. Of course, Chinese authorities are already on the path to easing, and they eased again today with the 10 basis points cut in the reverse repo rate. Overall, they are trying to support the economy through easier policy that not necessarily reflects in the currency, which is driven by different set of factors. Foreign investor interest in Chinese stocks, as well as the fact that they are running record trade surplus still. So overall, the year has started with most players looking to reduce the dollar longs due to heavy positioning, and that seems to have played out to some extent. However, market is unable to ignore the steep rally in the dollar yields and the prospect of larger sell-off in bonds and stocks, which we might see eventually. Hence, dollar demand will persist as a safe haven. Overall, dollar index, I feel, may still retest the previous highs. In India, of course, RBI has put a firm floor at 73.80, and as has happened many times in the last calendar year, RBI always defines the top as well as the bottom, and After breaking 74.05, we had seen a swift move higher, a lot of import covers, and the same thing should continue once we break 74.25 as well. We are seeing some technical indicators also turning bullish for the USD INR. Uh, we already know many macro factors like higher trade deficit, higher oil prices, tightening conditions in the US dollar, uh, and the spread of third wave. All these working as negative for the INR. Uh, I have a sense that most of the flows related to the new year have been done, and we must be seeing a way clear for more recovery in USD INR, initially to 74.50 and maybe to 75 in the coming weeks. Thank you. I just forgot to add one thing. It's a US holiday today, so there won't be cash transactions with the banks. Inwards might happen, but outward is not possible. Thank you.
Thank you, JK. Good morning, everyone. So basically, now there are two worlds where one is China and the major economies, where the China is looking to reduce and US and other markets are looking to increase rates. So China has today morning lowered rates on policy loan for 1 year medium-term loan to some financial institutions by 10 basis to 2.85%. Uh, the crude oil prices, another important variable for Indian market, Indian currency. Crude oil prices gathering further momentum. Today, Brent oil early morning made a 3-year high at 6.71. Whereas the Brent at the WTI also now dealing around $85 per barrel. Last week itself, both Brent and WTI moved high by 5.4% and 6.3%. The other variable which actually will keep markets on a risk off mode if the momentum in treasury yields going higher increases. Friday evening, US yield moved higher by, 10-year yield closed at 180 and 2-year yield closed at 0.96%. Now today, US is observing a holiday. Even then, today morning in Asian market, treasury futures fell, and that basically means there would be a further, as of now pricing 5 basis point jump in the 10-year treasury yield. So that basically means at this point of time, 10-year treasury yield in futures is dealing at 1.85%. Asian currencies are marginally weaker than Friday close due to stronger USD and higher treasury yield. The basic currency which we watch for a rupee is a Korean won and CNH. Korean won is 1193. CNH is still at 6.3560. So Korean won is higher by, it was 1185 on the Friday evening. Now it's 1193. RBI announced 6.54% cutoff on new 10-year security. And even for announcing 6.54, they have to devolve, they have to sell worth 5,400 crores to the primary dealers. So basically indicates that there was not much of a demand on 10-year security from the market at 6.5253. That's why they have announced a 6.54. And even for 6.54, they have to sell 5,400 crores to primary dealer. The total auction size was 13,000 crores. The old 10-year security closed at 658. And today, mostly the old security will take a further bidding and can move up by 3-4 basis. So there are good chances that 10-year security will go higher than 660 today morning. That's all from me. Thank you. Have a nice day.